Good morning, it's Jeffrey Christian. We're recording this actually on Wednesday, the 23rd of October, around 11:30 in the morning here in New York, for release on Friday, the 25th. Once again, I apologize for my voice. I have persistent head cold that's been going on for a week now. I want to talk about gold and silver and their outlook right now and what could happen after the U.S. election and how that all factors in. I have some notes, so I'll be looking over there. This is the world in which we live in. This is a chart that we use in the Precious Metals Advisory every month, where it's one of two charts that we have with economic, financial, and political risks. The green ones are positive for gold, negative for the world. The red ones are positive for the world, negative for gold, and the yellow ones are kind of neutral there. And, the fact is that we have these bubbles that we track, and there have been more of them. They've gotten larger, and they've moved to the right, which means that they're more important in terms of their potential impact on gold prices and silver prices. And they've moved to the top, which means that the possibility or probability of these things being very central to gold and silver investment trends and prices in the next 6 months are even more important than they have been. I'm going to apologize. I'm in a Russian state of mind. It's that time of year, autumn, and it often puts me in a Russian state of mind. And the current political dysfunctionality in the United States and in a number of other countries, the acceptance and not just acceptance, but willingness to go to nativism and fascism in the United States and other countries is very disconcerting. And what we call the evil of banality. It all reminds me of the late Tsarist Russia. And, it puts me in that mood to the point where I actually read Boris Pasternak's poem, February, which is also known as Black Spring, yesterday. February is Pasternak's lament at the February Revolution in 1917, in which the Tsar was overthrown and an interim government was put in, followed by the October Revolution in November of 1917, where the interim government was overthrown. It was a time of great chaos and disrespect for intelligence, to put it that way. So we've been projecting, and I apologize if I have this Russian state of mind. And, we did have the BRICS meeting in Russia, which started yesterday. And it was very interesting because, there are certain gold promoters who have been talking about how they're going to go to a gold-backed currency. But the reality, and they want to move away from the dollar. The reality is that the Russian government informed attendees that they should bring euros and U.S. dollars to pay for their stay in Kazan, Russia, during the BRICS conference. And that speaks to the galling reality that ticks Putin off so much, but it also speaks to the reality of the dominance of the dollar on a global basis. And it also speaks to the problems and issues that any movement to go to less liquid currencies in mass would have extremely deleterious inflationary impacts on those countries that issue those currencies. It's a tough time. We have been talking for some years about the prospects of severe political and economic realities, not only in the United States, but on a global basis, coming to bear in the last half in the final 4 months, about the final quarter of 2024 and into 2025. And we have been saying that we thought that that would lead to sharp increases in investment demand for gold and silver, and consequently sharp increases to record levels for gold and silver prices. We're there. That time is now upon us. The political and economic issues are very evident in the world. They're upon us. And gold prices are at record levels, $2,756 or so as I speak. And silver prices are around $34.50 right now, which compares to a quarterly average record price back in 2011. So we're there. And this has led clients and others to ask us, is this it? Yeah, should we be taking profits? And our answer is no. You shouldn't be taking profits. We are at the beginning of that period of time, and developments in the last few weeks, last few months, have reinforced our view that the view that prices would rise in the fourth quarter and the first quarter of 2025, that's a valid view. We're at the beginning of that cycle. We probably have further to go. Now, prices can back off at any given time, and they will. And we may well see a interim peak in the first quarter of 2025, although CPM Group actually expects higher gold and silver prices later. So our answer is no. You shouldn't be selling at this point. This is why you bought the gold and silver. Probably early part of the last stage of this cycle. You may want to buy some puts or put in place other hedges, but you should stay long the physical metal, because our analysis says that it is not over. That's really what I wanted to talk about. I will say that one of the things that people have to watch out for are things getting better on a global basis. And we do have this situation where we are now less than 2 weeks before a very momentous U.S. election. As John Kelly said, you know, the potential of the United States, of the now American voters voting in a fascist regime is very real. You really have to pay attention to that. It could get very difficult. But in addition to that, around the world, there are issues that are on hold until after the U.S. election. The Ukraine-Russian war, both sides are sort of waiting to see what happens with the U.S. election. You know, Secretary of Defense Austin yesterday was complaining about American apologists for Putin. And they're there. And some of them could rise to positions of power over the next 4 months, which could be devastating for freedom and democracy on a global basis, to say nothing of Ukraine. There are possibilities in the Ukraine-Russian war that things could actually go a lot better after the U.S. election, and that Ukraine could stage a significant response. Regardless of which way it goes, it's probably going to take another year to prosecute this war to an end, or up to another year, if we're lucky. And it could go either way. In the Middle East, there are agents that are trying to precipitate catharsis before the election. And then there are other groups and participants in that conflict that are clearly waiting until after the election. And after the election, you could see some significant developments in the Middle Eastern war, both negative and positive. Could go either way. In the South China Sea and in the Straits of Taiwan, similarly could see developments. There are any number of those issues that I was pointing to earlier that could see positive and negative developments. So you could see gold and silver prices back off for a while and then go back up. And they could strengthen into the first quarter the way we're projecting. And then they could come off as economic and political factors sort themselves out after January, February of next year. And you could see a period of time where the prices back off, not to where they were at the beginning of 2024, but perhaps to where they were in the third quarter of 2024, with the expectation that things can go higher later. So it's a very treacherous time, full of uncertainties and increased risks. And IMF in this environment, during its annual meeting, has released its October 24 projections for the economy. It's a 174-page report. It's dense, but there are portions that you can read, which are the summary. It's 174 pages. It's free online at the IMF. They come out with these twice a year. Their overall view is for a stable but underwhelming growth prospects for the world and for major economies, not only for 2025, but for the next several years. That's roughly in line with what CPM Group is projecting, although they are probably less pessimistic than we are, partly, I guess, because they're funded by governments and the IMF and the World Bank and the United Nations and the OECD. I tend to be very cautious about saying, that the governments that are paying our bills are really mismanaging their economies, and we could see severe economic problems. But they're seeing an underwhelming growth prospects, as do we, not only for the next year, but for the next several years. And they point out that the risks to their forecasts are skewed to the downside. It seems far less likely that the economy and the economic environment globally over the next 1 to 5 years will be better than people expect. It's much more likely that if expectations are not met, they will be not met to the downside. So we are at a time of heightened uncertainty, increased risks for individuals and nations and the world. And this period that we're now getting much more into is not going to end in the next week or two, or even 3 weeks. It's going to extend beyond the U.S. election. And depending on the outcome of the U.S. elections, because it's not just the president, it's also the Senate and the Congress. And who's going to control those will be very important to the economic and political outcomes over the next several years. So we're all sort of on hold, hoping for the best, expecting the worst with the U.S. elections in 2 weeks.